Welcome, everyone, and thank you for joining us today for our Council of the Americas Symposium panel on Latin America's Fintech Revolution. My name is Susan Siegel, and I'm President and CEO at America Society Council of the Americas. It is a true honor to have you all join us today. We hope everyone is well and staying healthy. We're happy to see all these familiar faces virtually for this year's version of the Council of the Americas Symposium and Bravo series. In response to the many challenges the world has gone through in recent months, we've transformed our yearly symposium to provide exclusive access and top-level content at a time when leadership and innovative thinking are more necessary than ever. Today, we are joined by top business leaders who will discuss the opportunities that fintech and the technological transformation of money provide for a growingly digital Latin America as it responds to and recovers from COVID-19 pandemic. We are thrilled to welcome Irene Arias, CEO at IDB Lab, who is joining us today for the Council of the Americas Symposium and Bravo series this year to moderate today's panel. Our audience will have the opportunity to ask our panelists towards the end of the program, ask questions of our panelists towards the end of the program. Please use the Q&A box that appears on your screen, and the moderator will read the questions for you. We'd like to thank our sponsors, Bank of America, the AES Corporation, Mastercard, SAP, Softech, Chubb Latin America, HSBC Securities, and Microsoft, our partner, the Inter-American Development Bank, and our media partners, America's Quarterly, CNN en Español, and the Financial Times. With that, I am going to pass the word to Irene, who will introduce our panelists and ask the first question. Thank you very much. And again, welcome to everyone to this very exciting panel.
Thank you, Susan, and thank you so much to the Council of the Americas for bringing us together. As I was thinking about our encounter today, I thought about 23 years ago, I was working in the microfinance industry, and I helped Margaret Robinson write this book, The Microfinance Revolution. And so the title today, The Fintech Revolution, it's sort of a fast forwarding to what's happened today and how much have we advanced and how so much more rapidly things change year after year, and how much we can enable people to access and be part of this fintech revolution and create a more inclusive region in that sense, but how much we have to work together to make sure that that digital and fintech revolution is inclusive. So thank you for bringing me back so many years and realizing and helping me realize like how far along are we? And we have a real great panel today. I think it really covers all the angles of this question of what really the fintech revolution entails, what are the opportunities and the challenges, and what role is this digital and financial inclusion playing in today's recovery efforts. We've seen a huge role played by the more than 1,300 fintechs in Latin America and the Caribbean, some of them with us today, like Konfio. And we've also seen an explosion and acceleration of the adoption of technologies that were already expanding but have accelerated, like big data and analytics, open platforms and APIs, cloud computing and machine learning. But technology is just a component. What we've seen, and I'm going to let you into something which we will release fully on November 16th at the Financial Inclusion event, online event, which is open to everyone. And that is the microscope report that we do every year with the EIU, with the Economist Intelligence Unit. So I'll just let you into some of the insights, and everything else will be on the 16th. But there we saw how much difference during the pandemic those countries with better digital infrastructure have seen in terms of taking advantage of this fintech revolution. What does that mean? Access to identification, mobile phones, and accounts. And I really look forward to getting into some of the details around that and how those enablers are critical before we can see a fully deployed solutions that are not just more efficient, leveraging all these new technologies, but that are also inclusive. So with that, I'd love to introduce our panel. We have here David Arana, the founder and CEO of Konfio, a great fintech out of Mexico. Osvaldo Gimenez, CEO of MercadoPago and EVP of MercadoLibre. Federico Gomez Schumacher, General Manager of Latin America for PayPal. And Kiki del Valle, Senior VP of Digital Partnerships for Latin America at Mastercard. So I think we couldn't ask for a more complete 360 view of the question today, and that is the digital revolution. So I'm going to start off looking at how the advent of COVID-19 has triggered health and economic effects throughout the world and our region, a fall of more than 5 percentage points of GDP expected in 2020, which adds to the considerable unemployment and inequality that we were already facing. But within that dire context, also see what has been the experience of each of your companies over the past few months in this context. Has this been a period of challenges and difficulties complicating the delivery of your services, or opportunities as well that has allowed your company to make new inroads? So we'll give 3 minutes to each of our panelists to get a sense of that. And maybe if you can start, David, please go ahead.
Yes, sure. First of all, thank you, Irene, for the invitation to be here, the opportunity to speak. But basically, I mean, Konfio, we've seen both lenses or both angles during this past pandemic. So Konfio today, we build digital banking and software tools to boost SME growth and productivity. But when we started out, and it's still our core business, it's the credit part. We essentially give unsecured credit to small, medium businesses, many of which had to shut their doors for many weeks or months in Mexico. So obviously, if we go back and we think of the first few weeks, our main focus was using our speed and technology to create recovery plans for all of our clients. And that was, area of focus number one for the entire company. We did that quite quickly, actually, and it worked out very, very well. And then after that was over, which was after the first 3 weeks, we kind of looked and said, hey, after crisis management, what else can we focus on? So we focused number one on capacity building. What I mean by that is, if we think of our lending business, most of our brain power, our technology, our resources, our people, we're focused on how do we originate better, how do we score, how do we underwrite quicker. We have a fully automated process where we only use technology. And that part, I mean, we essentially developed in a very, very short period of time the ability to better monitor and collect from our customers and work with them on creating recovery plans. So that was something that was not part of our our plan, at least not in such a short period of time, but we have a much stronger business there. And then the other thing is we had a kind of a side project which we launched last year so that we could help better develop tools to accompany our customers and have them look at the business that they run from a more financial angle. And that became it truly accelerated over the past few months. It's now a relevant part of our business. So we went through two essentially very different phases. Phase one was thinking about how to protect our core business and our customers, putting them at the very top. We had a strong balance sheet in order to do that, and then turn around and say, where are the opportunities and how can we better serve our customers in a more digital and very different world. And that's what we've been working on for the past few months. And now we have, our business now is much more exciting than it was if we think a year or two ago.
Well, thank you, David. At IDB Lab, we are investors in 500 startups, which has backed up the growth of Konfio in several stages. So I'm sure they're very happy with this progress, and it's really exciting to see how you've pivoted and grown and deliver so much support and impact to your clients during this time. We'll get a view now from Osvaldo. Osvaldo, and obviously MercadoLibre and MercadoPago were a startup at some point years ago, became one of the first unicorns. Now Latin America, the Caribbean has seen so many more. We're getting close to 30 now, 3 just in the last few months, including DLocal in Uruguay on payments. So a lot of things are happening in the payment area. How has the experience been from your end?
Thank you, Irene. I would say many things happened in the last few months, and many of the trends pretty much were accelerated by COVID. So I would say two things that we saw happening over the last few quarters were, first, a shift towards e-commerce. E-commerce used to represent only 5% of retail in Latin America, and there was a significant acceleration due to lockdowns mostly, and that demanded tools mostly for small merchants who were not doing e-commerce before to be able to start accepting payments online, and we were ready for that. The other thing that happened with COVID was, I would say, for in-store purchases, people prefer to stay away from cash because of the perceived risk of handling paper to another person. And so there was a shift toward cards and a shift also towards QR code payments. And we saw a significant acceleration due to the change of mix. And also things we saw was that things that people used to pay in person, such as paying utility bills, that many times in Latin America they would go to kiosks to pay for utility bills, they started to do electronically. And so a significant acceleration there. And finally, in a similar fashion as to what David was mentioning, what we saw were increased needs for financing. We had the advantage or the opportunity of having online real-time information from both our consumers and our merchants. And so we saw a big shift starting in March and April in some merchants who actually were doing better due to COVID rather than worse, because they were selling online categories that were in higher demand. And we were able to offer them loans mostly for working capital use for them to be able to increase their sales. And in the same fashion, more towards the half of the year, we started offering more loans to consumers who needed them to buy stuff that they were not getting through the typical financial institutions.
Thanks, Osvaldo. I think that's a perfect segue for Federico from PayPal. So Federico, go ahead.
Yes, thank you, Irene and Susan. Thank you for the invitation to be here today. So obviously, similar experiences as David and Osvaldo have mentioned, right? This incredible acceleration of online payments we've seen, and that's something that we have a strong belief that this is here to stay, right? Of course, we saw a peak. Physical stores are open. There's only one way to buy. That's not going to remain in the future, but we've definitely built a new base for e-commerce, for online payments going forward. I also think it's interesting, the experience that we saw, given though that we are an online company basically, right? So for us to, even as employees, and as you can imagine, we made a big priority, make sure that all employees were well, and we could, and that was priority number one. We had challenges in providing servicing to our customers, right? Because we still have telephone customer service. So we had to shift all of our colleagues working in telephone service centers to go home and work from there. And that was something that was never done before at that scale, right? And it worked very well. So we saw a complete transition from telephone calls being the number one channel to online chat becoming the number one channel, right? And it was a very interesting experience. We've seen the surveys of how customers feel about it, and there's obviously some changes. Some people would like to talk to somebody, but the reality is that it went actually very well. The satisfaction remained very high, even without being able to have telephone servicing. The other very important trend that we're seeing, and this is clearly not something new, but it is about Omnipayments, right? And Omnipayments being the idea that customers are now, and before, looking to potentially buy something or pay for something, with different forms, even regardless of how you're interacting with a person, right? Meaning, I can order food to be delivered and pay it maybe when the person comes to my house, but at the same, or I can pay it before, right? Or I can buy something from a retailer and then just go to the store and have it delivered to my car, but I paid for it online, right? Even though there is some form of physical contact. So that idea of now retailers and merchants in general, sellers, having to look at, I need to have the whole range of payment options, right? It is pretty amazing, right? And we saw it with many of our small sellers who have our iSettle solution, which is the mobile POS device, moving very quickly to say, well, now I also, my store may not be open, but I need to accept payments, remote payments. And that trend was happening before, and it will continue very strongly, right? And if you think about, for example, large retailers, right, they now have these buy online, pick up in store. So in Europe, they call it click and collect. That is something that is that was moving slowly in Latin America before, but it certainly has accelerated, and we expect that to remain fairly high for the future.
Well, thank you so much for that great overview. We are going to, of course, now hear from Kiki from Mastercard that perspective, and thank you, by the way, to Mastercard for that white paper on the impact on financial inclusion. That was great.
We'll talk about that in a little bit. Thank you, Irene. And thank you for the invitation to the Council of the Americas. I think from Mastercard's side, what we're seeing is really this transformation for the consumer adopting new payment habits. You can experience it both from changing spending patterns as well as the modality and how they're realizing their payments. And a lot of that is basically what Osvaldo was talking about, as well as Federico. The idea that in the e-commerce world, the e-commerce environment, we're seeing tremendous growth, exponential growth. Latin America, in fact, is the fastest growing region in online payments today. But that was true also a few years ago. I think what is interesting is that it's the juxtaposition, because now we need to also be more mindful in terms of the intelligent cyber attacks and the higher fraud and the new points of vulnerability that have to be managed. So that's on the e-commerce side. Likewise, in the in-store environment, we're experiencing a massive and sudden move away from cash due to health concerns. So the idea that the consumers now have to be are actually more conscientious of the dirtiness of money, which is something that we didn't have before, right? And consumers were not necessarily paying attention to who had that dollar bill that they are now getting in their hands. In fact, the way that we've actually seen it is that we've seen a tremendous growth in contactless transactions. Contactless transactions over the last year to date have actually grown over 300%. So that obviously being health concerns being the big reason for that. But to add to what my colleagues were saying, on the spending side, we're also seeing a move away or a move towards more debit products. So consumers are spending in smaller tickets, which are typically in debit. Many consumers are also not willing to use credit during economic uncertainty. So there has been a shift in behavior there to have debit be the top of wallet card where they actually want to add their purchases. And we're also seeing changes also in cross-border travel because of the constraints due to the lockdowns. What we're seeing instead is actually consumers moving towards traveling domestically, including spending in categories such as lodging and restaurants. So there has been an increase more in, let's call them staycations. The idea that you can actually enjoy, me being in Miami, we go to a restaurant at night, or some consumers are traveling within driving distances. So all of this is basically highlighting the digital trend that we're seeing across Latin America. We know that this digital move is here to stay, as Federico actually mentioned, is here for the long haul. And it's impacting not just the world of commerce, it's also driving digital transformation at banks. It's forcing collaboration with fintechs, and it's also allowing new players to compete. So all of this is pointing towards the opportunity that we have in digital.
Thank you, Kiki, and I like very much that you threw in at the end the opportunity for new players. I think to be expected that more and more players that didn't even start in fintech come and are part of the solution. So now let's maybe talk a little bit about that Mastercard study, because there you indicated that about 40 million people across Latin America and the Caribbean have become banked in the past 5 months. Actually, our records show that in Brazil alone, it's possible that even up to 67 million accounts, and this is according to the microscope, have been opened. And that has enabled a lot of the cash transfers and this initial support for the recovery that a lot of the governments have been pushing through. So all of that has occurred through digital means and digital payments. So could you tell us a little bit, Kiki, now from how did this happen? What are some of the other findings, and how much of this you see as a here to stay, and things to kind of watch out for?
Sure, and I think that we're shining a light on the topic of financial inclusion despite the pandemic, right? I think that this is actually one of the positives that have come despite the last couple of months in which we've been living in isolation and in lockdowns. So if you take a step back, when the world went into quarantine, many Latin American governments responded by providing subsidies through digital channels for the most vulnerable people. The government subsidies served not only to drive economic activity, but they were also fundamental in growing access to the banking system. It basically forced consumers who previously used only cash to open a bank account, and they had to seek new ways to use these funds. So we decided to study the behavior at Mastercard, looking at specifically Brazil, Argentina, and Colombia. Not just looking at that initial payout, but looking at the consumer behavior from beginning in April all the way through September, so that we could actually understand whether there had been some change and what were actually the triggers of that change. And so the initial behavior, as one would expect, majority of the consumers, actually about more than 50% of the consumers, typically when they receive funds, they immediately go to the ATM and they withdraw the money. So it wasn't necessarily surprising when we saw that in the months of April, May, with the initial disbursements of subsidies, about 96% of the consumers transfer their funds or went to an ATM to make that cash disbursement. The only problem with that model is that it's social distancing, concerns over health, and the lockdowns, which force people to find alternative means to retrieve those funds. And that's really where the interesting part is. When you fast forward, by the end of August and September, the main use cases were purchases at online merchants like MercadoLibre, personal payments to friends, to families, and payments to essential services such as utility bills. So what we've seen is that the longer that the pandemic has actually been in play, the more the consumer behavior has actually changed. The study affirms that thanks to social benefit programs during COVID, the unbanked population in all of Latin America will have been reduced by 25%, given the passing of time. I mean, so this time that where consumers have had to adapt their behavior to operate primarily digitally. But I think this is the important piece. When we look at financial inclusion, it cannot just be about that access that we're all aiming for in terms of providing somebody with a card. It has to, or an account. It actually has to be about how do we ensure that this new population stays within the financial system. And that's the way in which we need to ensure this takes place is by building this ecosystem of different use cases that allow that consumer to find relevant benefits to be a participant in the financial system.
That's brilliant. Thank you, Kiki. And by the way, I think this is where I see, hopefully with players like Mastercard and others, the potential for decentralized identifiers as unique identifiers that together with other standards and data models like verifiable credentials can really enable a new model of digital identity, the self-sovereign identity. I think that could create more permanent effects and move away from just the one step of opening an account, but actually creating a track record and being able to use that track record to fully access the whole range of financial services. But let's move to then. Let's hear from MercadoPago, because as all of you touched on, in addition to this explosion in the increased number of accounts, we've also seen an acceleration of digital payment methods. So MercadoPago is one of those unconventional players that has entered this market from an e-commerce platform, which was at the origin of MercadoLibre. What are some of the opportunities that you see growing digital payments beyond the origins of e-commerce, and if you maybe can link it to the use of e-wallets and leveraging decentralized identifiers and other tools?
Absolutely. So I think that what happened for us was many years ago. First the iPhone was launched, then Android came along. And so everybody started having a computer in their pocket. So not everybody, but most people in Latin America, even people without a bank account, started having a computer in their pockets. And so we realized that the capabilities we had built, mostly for e-commerce, could be used for in-store payments, basically. And that we had two different form factors for those. First, we launched Mpos throughout Latin America. We saw there was a huge opportunity for Mpos. Traditional POSs were typically rented out by financial institutions or by acquirers, and those were expensive. Typically, they costed $20 to $25 per month. And we were able to start selling them, and given the scale we achieved, to be able to sell them at a loss, sometimes for $10 or $20. And so we were able to grow significantly the number of people who are able to take payments using cards. And furthermore, what we saw afterwards is we saw the trends that were happening in China with the big wallets, with Unfinancial and Tencent Pay. And we saw there was an opportunity to do something similar in Latin America. Again, more people had smartphones than bank accounts. And many of those who had a bank account, as Kiki was mentioning, would take their paycheck the first day out of every month and use cash for the rest of the month. So we started building capabilities into our wallet for people not to need cash, to be able to make a payment using a QR code payment or pay an utility bill or top up a mobile phone, or even investor funds, invest their money in a money market fund. And with all this information, we enable them to build a history, a payment history, and then we can use to offer them a loan. So when I think of financial inclusion, I think of being able, thanks to technology, to provide access to all of these financial services, which most of us have access, but 50% of the population in Latin America did not. Being able to make an electronic payment, to receive an electronic payment, to invest funds, and to make a loan. I think that is basically the premise around which we are creating and adding use cases to our wallet.
Great. No, thank you, Osvaldo, for that. Perhaps David, you can complement this and maybe comment on what Osvaldo just said from the perspective of Konfio, that's primarily serving SMEs with a very disruptive model, and then also complement with what kind of other portfolio of services you offer. You said at the beginning that you saw an opportunity to accelerate things that were more like side projects and have become more mainstream. So maybe to tell us a little bit more and kind of double click on that.
Yeah, sure. So first of all, I mean, for us, the way that we've always tried to measure, the way that we've tried to measure financial inclusion is by focusing on the impact that we're generating on clients. And that's basically growth in sales and also growth in productivity. And for the first metric, we have been tracking that for several years. Last year was an important year for us because we got to an interesting scale in terms of our credit business, and we realized that on average our clients were growing 28% in sales a year. Now that's a pretty big number. Given the scale, less so. But if you have consistent double-digit growth rates for several years, I mean, your changes as a business owner, team, even tools change completely. And that was a defining moment in our company. So at the beginning of last year, we said, look, the future for us, in order to accompany our clients and avoid them from graduating, has to be twofold. One is taking care, and this kind of links back to what Kiki was saying. It's all about creating a full suite of services or an ecosystem. So we launched a financial services 360 strategy. And then the second thing we did was create a series of business tools. And that was and now I'm going to link this to the suite of services that we offer today. But we basically, after having all of these numbers mapped out, and then having several conversations with customers, we have monthly breakfasts that are now digital. But after having several of those, we learned that, they're very good operators, but from a financial point of view, most of our customers, they don't have a very, sophisticated team or maybe a CFO. Everyone has an accountant, but, that area of study tends to focus on the past, not so much think about the future, at least in the scale of customers that we serve. So that was when we launched a series of, back then they were side projects. And what we've learned today is that the pain point couldn't be more true and real today. Customers have a much stronger need to look and understand the financial discipline of their business. One of the biggest pain points that they have is also who they give terms to, right? So what ends up happening is we mapped out all of our customers who sell to other merchants. A lot of that goes out to 30, 60, 90, or even more days. And when we first saw that number, we thought, hey, that's probably, our customers selling to very large corporates, and we were wrong. most of that, so 88% of that is actually our customers selling to other small, medium merchants, businesses. And roughly a third of those transactions don't get paid on time. So we've developed a series of tools which allow our customers to become more focused on their business and not spend so much time trying to figure out who to give terms to, go and collect, figure out the offline part of that transaction. So now, not only are we focused on boosting SME growth and SME sales increase, but also productivity through a series of SaaS products that we've launched. So we have a fintech plus SaaS business that are highly complementary. And we've proved that these two, when they're put together, it makes a much stronger and competitive customer that can go and compete with larger businesses out there.
Great. That's a great example of a major trend that we saw. I think I mentioned earlier, there are about 1,300 or so fintechs in the region. I think 2/3 are in payments and remittances, in lending, and in SaaS, primarily for SMEs and for people. So thank you for giving us some concrete example about around that. And I want to turn to Federico to see from PayPal's point of view and how you're moving into Latin America and the Caribbean. You mentioned some of the challenges and opportunities for the acceleration of digital payments. We've touched on this already a little bit. How are you approaching that? And what do you see is the role of PayPal in promoting democratizing access to digital payments in the region? And how are you partnering with great startups like Konfio in the region?
Yeah. So let me start with, because I want to just go back to something that Kiki said, which I believe is really, really important, right? Which is, what's the actual definition of financial inclusion, right? Because it is not, and I think we should really be all in agreement that it doesn't mean that a person has a bank account. That is far from being financial inclusion, right? It really is about for a person to have the ability to put money somewhere, right? Other than physical cash at home, but at the same time being able to manage that money in a way that, for example, if I have a problem and I need extra money, that I'm able to, it's almost like I'm able to weather a difficult situation, right? So then it becomes a real relationship. So that, starting with that, I think is really important. That's the way, PayPal, we believe. And by the way, to your part of your question, we actually believe that the only way to achieve that is through partnerships. And in fact, of my other three colleagues in here, they're all very important partners of PayPal. And with each one of them, we're actually doing a different thing. So with Mastercard, MercadoLibre, MercadoPago, and Konfio, right? We are working partly because it's a big region with a huge opportunity, right? There's still a lot of people that don't have access to online transactions. And even those who may have a bank account, as I was saying, that's not enough to be able to say, hey, they've kind of, crossed that bridge and they're fine on the other side, fully taking advantage of online. So for us, that's in PayPal, that's how we see part of our mission as a company, right? So it's not a situation where shareholders are the number one stakeholders that we look after. We have to do we have to be able to do good for the majority of the people that we serve. Otherwise, we truly believe we've not reached our objectives. So we also strongly believe that democratizing financial services has to be done with a strong level of online, right? Because we've seen for many years that the idea that there has to be this physical infrastructure of financial services in every single place around the world is just not feasible, right? However, I think Osvaldo mentioned now everybody has potentially a branch in their pocket with a mobile phone, right? So that's where we need to. That's how we need to serve. At the same time, we also are very aware we have an area where we are very good at, and that's online payments. So we don't intend to do everything for everybody, and that's where partnerships come into play, how we work with others to get to this goal.
That's fascinating, Federico, because I think that I've never heard this level of willingness to kind of collaborate and think of that greater goal, and hopefully the combination of players around the table today. And I recently joined the advisory group at the Web for Digital Payment Infrastructure, and it's also a combination of many of global players that are leaving their interest aside and looking at how to create an inclusive digital payment infrastructure. So I'm. It's great to hear also PayPal's approach on this. I think Kiki, I wanted to also bring in a little more the perspective around the ethical and responsible use of technology and digital information, and how all of this opportunity can happen without having to give up data privacy and or creating algorithmic biases and so forth. It'd be great to hear your approach, Mastercard's approach to this, and how do you see or do you see scope here for a set of industry principles, standards? There are lots of frameworks. I don't think we need more frameworks, but we already collaborate around FairLat, which is an initiative precisely to translate those frameworks into specific tools for entrepreneurs and also translate it into data, into public policy, and are very, very glad to be partnering on that. Give us a little bit your perspective. How do you see the adoption and making that real and something that can be applied?
Sure, and I think this topic is fundamental, right? I think security is a fundamental thing that we all need to be mindful of, and that includes how you manage and use data. I think every company in this panel would actually agree. We have a responsibility to the individual, and we have a responsibility even to society to do what we can to ensure that data is managed appropriately. Now, when you look at Mastercard, we process over 70 billion transactions a year. We bring together millions of merchants. We have billions of cards. We have thousands of issuing banks. So you can imagine how or why security would actually be extremely relevant for us, and we take it pretty seriously. So just as a cardholder trust that their transaction goes through whenever they tap or they dip their card, they have to trust that the information is safe with us. I mean, that is basically what we argue. So as a result, I think across the company, we see data practices being applied to product development, management, while ensuring ethical data standards. Let me give you two examples just really quickly. In the world of payments, think about why we push for tokenizing credentials. The idea that when you save your credentials on an online merchant like MercadoLibre, I can actually save it as a token. I don't have to save the actual account number. It's something that we work with MercadoLibre today. And we actually work with PayPal also as a digital wallet. So these are solutions that you can actually apply. That technology allows us to use And at the same time, we're protecting at the end of the day, the individual. But even going beyond the transaction, we pioneered an anonymized process. It's a third-party data trust named Truada to enable compliance with the GDPR when conducting consumer analytics. Most of us think of GDPR, the regulation that was established in Europe, as something that has significantly increased our personal data privacy. But these regulations also presented challenges to companies that use that data, that rely on that information as an invaluable resource to drive the product development or to even improve the customer experience. So the GDPR, while the objective was the right one, it also presented additional challenges. And that's where through Truada, through this entity that we've actually created, we help provide consumer analytics in an anonymized way using the same principles that Mastercard has built for our network over the last 50 years. Our view on data is pretty simple. I mean, the consumer owns it, he or she controls it, the consumer should be able to benefit from the use of it, but it's up to us to be able to protect it. So I think if you look at it from that point of view, the consumer is the one that sits at the center of this entire strategy. But we need to provide consent, transparency. We need to understand the data ownership, data rights, and we also need to ensure that the information is secured and it's driving inclusion, which is obviously a very hefty goal that we all have across the system.
Thank you, Kiki, and I want to underline what you said and the need to accelerate also the use of universal digital identifiers. I think that could be a great accelerator of exactly what you are doing, but it has to come with the right data governance. So I think the only solution to that is partnership, including institutions like the IDB that are agnostic to the technology, and can provide that sort of trust. So I'm going to stick to that notion of or that topic of partnership that has emerged so much now in the conversation. Maybe to hear from Federico how you are partnering with MercadoPago, and maybe Osvaldo, you can complement that. How far are you taking that partnership? Kiki already talked about tokenizing credentials. What are you doing in terms of facilitating e-commerce payments and other things? How far do you see that partnership going?
Yeah. So I was saying, our view is, this is a big opportunity. There's a lot of things to do, and that's the beauty of it, right? That we are, I feel lucky that we are in the right place at the right time when it comes down to online payments. And so I'll give you one example of how we view the partnership with MercadoPago and MercadoLibre, right? Where as PayPal, we are a global company now, right? We basically, you can open a PayPal account in it's something like 202 countries. So there's only like a handful of countries where you cannot open a PayPal account and transact. And that has led us to have, over 350 million customers around the world. One of the and millions of sellers, right? Merchants as well selling. And because the online business, everything's so connected. So you can imagine cross-border trade has become one of the key flows of commerce, meaning a consumer based in Costa Rica that is looking to buy something from a seller in Europe, right? Or a small business in Uruguay who has actually something that a buyer in the US wants to buy. That has become fairly standard way of operating. And this is where our two-sided network, meaning, we have consumers, buyers on one side and sellers, merchants on the other side, and we help them put together. So one of the areas with MercadoPago having, strong base of customers who are buying, within the region, within Latin America, thinking about MercadoLibre sites. So we said, well, if we put the global network of PayPal together with the customers of MercadoLibre in the region, then we're actually being very complementary and adding quite a bit of value to that, right? So we created part of the partnership around cross-border transactions. And that is an area that is that we're seeing incredible growth as we're seeing with domestic transactions, right? So that's growing quite a bit. And it was growing before, right?
And great. And the cross-border transactions, also a great opportunity, I think, linking that to the availability of technologies like blockchain and digital currencies could be a great game changer. We're working with some of you on that through LockChain. I'd love to hear from Osvaldo on that perspective on partnerships, and also invite anyone in the audience to post any questions. We're going to have a few minutes at the end for that thing. Go ahead, Osvaldo.
Thank you, Irene. So let me complement what Federico was saying. I think that the opportunity for cross-border transaction is huge. And the other opportunity, which is also huge, which we are exploring is remittances. As you know, there's a big flow of remittances from the US into Latin America, and we are collaborating with PayPal, exploring or working to link Zoom accounts to MercadoPago accounts so that founders in the US are able to send money to Latin America and people are able to withdraw those funds using the MercadoPago account. I think that combining our strength in those markets can make the remittances market more efficient. This is a market that for remittances of small value, the percentage you have to pay to send them is quite high. So we can make all of this process go digital. We can save people a lot of money, and I think that can have a significant impact.
Thank you. And how about from Konfio? Because we're hearing a lot about areas of opportunity. One of the things that we observed as well is obviously an increase in some potential red flags, including in terms of credit risk. So it'd be great also, to have a balanced view of all these opportunities, but also what to watch out for. So perhaps, David, you can kind of talk us through that and how you're able to measure the risk that you're facing in your portfolio.
Yeah, sure. So the first thing that I would say is that we think, as the rest of the panelists, that digital is here to stay. And for several reasons. One was, and after having lived through the initial first few months and seeing really positive results from our credit business. So the one thing that's true now is that from a consumer's point of view, their mental map has now changed completely. So everyone used to think, or most consumers, businesses used to think that you had to go into a branch and have like an offline process to get funds or to even get access to financial services. That's not at all true anymore. Even although the regulatory landscape is much slower, it's catching on and it's helping move in this direction. So that's also good news. And then the second thing is, after benchmarking our results and with others that were much slower in adapting to this, we're even more convinced that the way to serve this market, especially in the financial services landscape, has to be digital. You have to use data as the core engine of all of your decision making, and you have to be very quick. Why? Because our customers adapt as well. So if you use like a traditional underwriting system that looks at information from the past, way into the past, and things are moving as quickly as they were in March, April, May, June, then the decisions that one makes aren't going to be the accurate ones. So we're super convinced that having access to real-time transactional information, using data as the core engine of all decision-making, and being very adaptive is the key to success in serving this market. The other key to success is, and by the way, that what I mean by that is the entire life cycle, right? So from an underwriting perspective, monitoring, collecting, future sales. But the other very important aspect is also combining that with something complementary. And going back a little bit to the financial inclusion bit, it's not only, hey, here, I'm going to get resources in the hands of many businesses, but how are they going to best use those resources? And that's why the ideal combination is, number one, fintech, getting access to resources, helping them grow their business, their sales, but at the same time, think about how to be most productive with that, how to plan for it, how to think of it from a financial angle. So that's why fintech plus SaaS is the future for us. And obviously with a very rapidly changing world, one has to be able to adapt to it, and using data and technology as the core values of growing this are going to be more important than ever.
Any of you want to complement or comment on that, what David just said?
I think we are all pretty much aligned. Irene, on what David said, I think that from our side, we also believe that if you want, this was the pandemic provided sort of a step function in terms of people having to adopt financial services, digital financial services at a faster pace that they had to in the past, just because of the lockdowns and the inability to go to stores. And on the other hand, on companies like Konfio and ourselves having to make sure we are able to provide credit on shorter lifespans and on shorter feedback cycles, and using information that probably are available real time rather than to wait for long periods of time. And I believe these trends will continue and accelerate after COVID. There's no turning back. There's no way for people who in the past were happy using cash and spending time that they didn't need to. Now that they have reset their expectations, they were able to try these new services. I don't think there's anywhere that's going back.
I would agree. And Irene, just super quickly, I think we talked a little bit before about, or I talked a little bit before about the role of the public sector in driving financial inclusion. But what you find is that the private sector has a very important role to play, and it's a key one. I mean, we can leverage our technology, the expertise, the resources to drive the change. And for the most part, that we have the capability, the know-how to build new and sustainable business models. So when you think about the power that the private sector has in the partnerships, in the collaboration to help bridge the gap of digitization and bringing digital financial services to the mix, I think the opportunity is tremendous. We have a great region that is moving with a digital, already connected consumer. And we now need to find ways to drive new business models that can actually appease to this consumer. But it's an industry with tremendous change, from open banking to the use of AI to this shift to digital. So there's tremendous opportunities for us all to be able to capitalize on
it. I think this is sort of a great point for us to kind of start to wrap up and maybe think of what are the dynamics of financial technology innovations in the region post-pandemic, and where do you see a need to we haven't touched, for example, on the availability of raising financing by fintechs like Konfio in this environment. No, so maybe just as a closing sort of thought for all the participants here, what do you expect to be the dynamics of financial technology innovations in the region post pandemic, and then some of those critical factors that are important for you to be able to grow or take advantage of those dynamics? And maybe we can go the reverse way that we went at the beginning. So we start with Kiki and then Federico, Osvaldo, and finish off with David.
Sure. And I guess just to keep it short, I think we've seen tremendous innovation in times of hardship. I mean, I truly believe in the saying that necessity is the mother of all inventions. People find ways to really identify pain points and find ways to innovate once that pain point has been identified. I mean, technology, when we think about innovation, is actually not about the technology itself. And I'm sure we can debate this, but it's rather what problem that innovation is set out to solve. And I think that across Latin America, we have tremendous opportunity with the dynamic regulatory environment that we're seeing, with the increasing competition that is also coming in the form of fintechs. At Mastercard, for example, this year, we've actually seen an increase of 40% in engagement with fintechs, deals and new fintechs that are actually coming to market. So it is, despite the pandemic, we continue to see interest and moves towards driving new business models to the fold. So I think that there's actually a lot of opportunity and a lot to look forward to over the next couple of years.
And the second part of the question, what are some of the more critical factors for you to be able to realize those opportunities?
I think for us is back to the topic around financial inclusion, is how do you solve for that continuous engagement, for that usage, for driving financial security for that consumer? We cannot only rely on putting a card in front of that person. We need to think about how do you actually build a product that meets basic human needs? How do you actually drive segmentation? How do you build a product, for example, that is better suited for women who are underrepresented today? How do you actually also drive education and training while you're also pushing for digital tools and solutions? So I think there's a component about education. There's also a component on use and what is required from a product development standpoint to make that happen.
Okay.
Yeah. So listen, from my point of view, there's only one way this is going, and it's growing. There is absolutely no way around it. There's quite a bit of unmet needs and pain points in the region to make this an incredible opportunity, right? And the good thing is that a real ecosystem is being created today, right? Where you have, of course, you have talent, and that has always been there, but you didn't always have the capital to be allocated to that talent to create things, right? So you have the interest of companies like PayPal looking at the region and saying, hey, this is in fact the fastest region in the world, not for us and for many others, right? So let's allocate more investment to the region, whether it's in the form of direct investment to our business or potentially, capital allocated to, taking, doing M&As, but the same holds true for purely financial investments, right? Now you see many venture capital firms here in Silicon Valley or elsewhere in the world looking at the region and knowing that, as you said, Irene, there's a number of unicorns, and it's an interesting place because allocating capital in the traditional places, there's a lot of competition, so it's not necessarily the easiest. So Latin America is a good place for sure. So we'll see that increasing. I think that to your second question, there needs to be a combination of these things that I mentioned, plus regulation, it's hard for governments to keep up, right? Things are changing too fast. It's hard even for us, but there needs to be quite a bit of attention put on this. And you see some of that, right? I mean, there's new systems like Pix in Brazil coming online, which have a possibility of changing how things get done. So that's another important part.
Thank you so much, Federico. And thank you for your optimism for the region. Osvaldo.
I'm very much aligned with Federico in terms of all we see going forward is more growth and accelerating growth. But let me deep dive on two areas, one which you mentioned and the other one which Kiki mentioned, that I think there are regulation opportunities going forward to make this growth even faster. One, you mentioned a few times digital identity, or I would say furthermore the ability to, for example, to facilitate digital onboarding and to share KYC information. Today, in most countries where we operate, each financial institution, each fintech has to do their own due diligence in terms of KYC. And in some countries where this information is shared, it facilitates digital onboarding and facilitates financial inclusion. I think that's something that we should all look into. And the second one is open banking, which Kiki mentioned, that I think it's coming to Brazil and it will probably come into other countries in the region. And I think that will serve to facilitate collaboration, even as it increases competition, again, between fintechs and banks and so on. But I think the winner will be the consumer, who will be able to shop around for, from the one hand, better rates, or to use whatever wallet or payment initiator he or she wants, regardless of who she or she banks with. So I think those two areas will significantly benefit the consumer.
Thank you very much. David, you have the last word.
Look, I mean, I think lastly, the only thing that I can add here is that very optimistic. Our total addressable market, I think, for all countries across the region just became significantly larger because of the massive adoption of people and also changing the mental map of going from a fully offline experience to, hey, you know what, if I do it digitally, it's not bad, and hey, I actually prefer it now. So that's one trend that is greatly going to benefit everyone and all businesses that have a digital footprint. The other one is access to capital, right? So things have changed dramatically over the past few years. It used to be that a few years ago, there were only a handful of funds that were focused on very, very early stages, and then you would have nothing in the middle, and at the end, maybe private equities focused on more traditional businesses. But now that that entire range of different types of funds is much larger. There are also foreign investors who are interested in the region. For the reasons that I'm sharing, our total addressable market is much larger. And then going back to something that was mentioned before, one of the most exciting things about the region as well is that we're solving real problems here. So a lot of the startups that I can think of, whenever they launched, they weren't able to plug into other types of services. They had to build out many small companies within their own just to be able to solve a problem at scale. So there are true opportunities here. The one thing that still remains a challenge, I think, but it's definitely moving in the right direction is talent. I mean, I think the region has great talent. If I think back 2013, 14, it was almost impossible to get any senior type of talent to join a company that had been launched a month ago. But I think that the one thing that's helping is the success of some of the other companies, some exits, some companies that have now become unicorns. Obviously, MercadoLibre, MercadoPago is a very inspiring story, and that definitely helps bring more talent to companies that are essentially startups solving a very important pain point throughout the region. So if we continue to see that, super optimistic from all those different angles.
Just to share a bit the optimism there about the opportunities that we're facing when we look at the market today. Less than $5 billion invested in venture capital in general in Latin America and the Caribbean. Only a portion of that are addressing these opportunities. And why not think of a market that could be 100 billion? This would not even make it at the level of other ecosystems in the world. So I think we have evidence, and today we had 4 great examples to show why we should share that optimism. I'm just gonna underline what you said about we are in the right place at the right time regarding digital payments. Digital is here to stay, and how this is about solving real problems at scale. I think that was really, really great, and how you all put so much emphasis into the only way to achieve these opportunities and this goal is through partnerships. I also really appreciate what you all shared in terms of how to do this with the really human factor in mind, and how you all brought in the need for data and digital literacy, and how to take into account that financial inclusion is not just opening an account, but for a person to have the whole experience, to own their own data and to be able to really take advantage and have much more access to opportunities. And finally, I think you all also gave us a lot of insights into what are some of the enablers that would accelerate even more or make this ecosystem work better. I think we touched on digital infrastructure like digital identifiers, self-serving identity, and also leading to tokenized credentials. I think there's a lot in the future in store for us if we do that together. And finally, democratizing access to data in a secure and anonymous way, I think could also give the opportunity to many to come up with solutions that address the many still unsolved problems in the region. So I want to thank you all for sharing all these insights. I think you are a great example of that. Marcus Aurelius' phrase that impediment to action advances action, and what stands on the way becomes the way. I think you've become really a great examples of that. And thank you to the Council of the Americas, and back to you, Susan.
Thank you, Irene. I want to thank you, and I want to thank our amazing speakers. This was a truly great conversation, and I think it's safe to say they're all leaving the program today with lots to think about. I share all the speakers' optimism about the opportunity for fintech in Latin America. It has so many components. It is empowering. It is giving people the opportunity to bank when people can't bank. It is clearly creating more opportunity for all the peoples of Latin America. So I have the privilege of seeing it through the lens of many companies, including MercadoLibre, MercadoPago, and I just see the opportunity continuing to grow as Latin America grows, returns to growth, but also in these very, very challenging times. So thank you again to everyone for joining us. I hope everyone enjoyed the program, and I hope everyone will be safe at these very, very challenging times. I wish all of you the best, not just to you, but also to your families. Thank you so much.